Good morning. Let's go to Friday's market. Nifty ended up in the positive 11,754.65, 112.85 points in the positive, 0.97% in the positive. Opened around 11,683.75, which is well above the key turning point, and it has went low around 11,661.75, high around 11,762.90. Let's go to the prediction review. In my prediction, it is shown mixed kind of scenario, but this is the key turning point around 11,677. On Friday, the market has opened well above that level around 11,683.75, and it has kept a low around in the average of resistance level 1 and the previous closing. Almost it has broken that level, but still 10 points it has kept a low exactly around 11,661.75. It has kept a low, and then it has moved towards to the positive side, and it has broken the second resistance level 1, which is the key bullish trend 11,717, and it has almost reached positive average, but high kept around 11,762.90 and closed in the 11,754, which is nothing but if you take the average, it is somewhat closer to the average. The all key indication which indicated the market has opened in that key turning point around. This is the point, because if it is not breaking, the market will fall. If it is breaking, it will go towards to the positive side. And one more key point is that the next overall average level, which is 11,711, which means if it is breaking that level, we can hold that position for the next day, because after breaking this particular level, it shows that the target is not set. It may go to any extent. We need not to sell after reaching that level, because it may go towards to the next level on next day also. It may be a bullish. You may get some 20-30 points. That time you can keep a stop loss. That is what it is indicating. And after reaching that 11,711, at the same time we have the key trend which is also matching after reaching this particular level, which is entering into the key bullish trend, and that is also indicating the same. Let's go to the prediction for Tuesday. On Tuesday, the ratio indicating evenly poised 4:4, which means it is kind of a both side situation, a volatile market it is indicating, but still we need to watch out how and where it is going to open. If anything opens abnormal in the gap up or gap down, it may not be ended up in the volatile like positive negative. It may be one sided. It will go up and down in the positive, or maybe it will go up and down in the negative itself, like that. So we need to watch out the opening constantly. On the average, which shows negative as an impact, and weightage is also indicating negative 4.73 versus 6.03, and absolute frequency indicating positive, which means it is a mixed kind of situation, but still we need to watch out the opening. Why? Because if the opening is above those key turning point around, or maybe bullish levels or bearish levels, it depends on that the market scenario will change. 37.78% chances to end up in the positive, 62.22% chances to end up in the negative, and these are all the ranges which shows market may travel in between these ranges. That is what it shows. The flat positive itself, flat negative itself shows 123 points in the negative side, which means opening we need to watch out. If the opening is in the negative side, then we need to carefully trade. If the opening is in the positive side, then we can able to keep stop loss and do some kind of trade. But anything above those turning point around, we need to watch out. So first half an hour to 1 hour is crucial, but average it shows around 56 points in the negative side. These are all the levels. Now I have updated some kind of formula, so which will show the trend and ranges quite easily. We can able to see on the above side, which I mentioned, this is the key turning point around points, which shows 11,864, and then the bullish trend which is starting 11,885, and this is the buying trend for the bullish 11,757.19. So On the downside, which shows the turning point around, which is around 11,474, and the bearish trend, if it is breaking 11,510 after the turning point, which it will extend your profit if you can hold, if it is breaking 11,510, sorry, 11,474, because this is a little above the that, and 11,474 is below the 11,500, so which means you can hold if it is breaking those levels. And this is the risk buying level 11,667, and you can short as well. I'll explain it. These are all the range which shows the market will travel in the most of the time. If it is breaking those levels, after that it may enter into the next level of the risk trades, which will be, it may break these level. Until if it is not breaking those levels, it will come down. For example, if the market is going down to somewhere around more than 100 points and 220 points in the negative side, still it has a good chance to recover from that low towards to some extent. At the same time, on the positive side, 46 points to 92 points, if it is opens or moving towards to the positive, it is not breaking this particular level which is highlighted in the rose color, like pink color, the market is going to turn around from that particular level towards to the downside. That is what here is also. These two ranges, if it is not breaking, market will turn around from that low towards to the positive side. At the same time, these ranges also indicating you can able to buy and sell in between. If it is reaching that bottom, you can keep stop loss, then when it will go to the next range. How it is purely because depends on these levels. 11,864, that is the key turning point around for the bullish. If it is not breaking, then market will come down. So that is the range which it is marked in this color. So you can able to trade quite easily if those differentiates are there. If it is breaking those levels, then it will become bullish, and then it will stay in the positive itself. Like that we can trade. On the downside, it is too far, around 11,474, which is around more than 260 points, which means no matter how negative it goes, if it is not breaking these levels, it will come up and go towards to the positive, or maybe recover from that low to some extent. It may not go towards to the positive, but it may recover from that low somewhere around 200 points to some maybe 120 point, 130, 140 points recover, and stay in the negative itself and close somewhere in between 50 points, like that. So that is what it shows. So we need to watch out those key levels around 11,864, which is far away, almost 110 points it is there from the previous closing. Previous closing is 11,754. So anything above 110 points, then only the bullish will have control and stay in the positive itself. Otherwise, no matter anything less than 110 points, it will come down towards to the negative side, or it may lose its point. No matter what, it may be 40, 50 or 60, 70, no matter what points it stayed in the positive, it will give up its points and come down towards to the flat positive, or maybe flat negative, even go towards to negative around 50, 60 points. That is what it is indicating. So we need to watch out these levels are breaking or not. If it is breaking with the 10 points, then it may have a chance to stay in the positive itself. On the downside, we have around average around 50 points. It is showing in the negative as well in the chart, which is around 56 points. So it is quite clear that no matter how positive it goes, it may have a chance to come down towards to this particular level, and the average is also matching. So anything anyone wants to buy, they can buy at this level 11,007, not 4, keeping 5 to 10 points. Normally 10 points nowadays, I'm telling 10 points as a stop loss and go for a buy. That is a kind of a risk taken, but still, if the stop loss, it may go down to any extent, but it is a kind of a risky trading. You can trade with the stop loss. Sometimes if it is not hitting, you can able to book some profit. but how fast and how much far it is going depends on that. It may go even further down to the average of 11,657 as well. Nowadays I am updating the average as well. Before that I never updated those averages. I've only given the resistance levels, and I mean resistance level and support levels. But nowadays I am giving with the average. Why? Because sometimes it happens, and if the gaps with the support levels and the previous closing, huge gaps are coming because 92 points it shows. So it sometimes it takes the average level as a high and come down towards to the negative side, and we may book some profit. So anyone go for a short, they can keep 11,800 with the stop loss of 10 points and go for a short, so they can able to book some profit. This is the idea. So that is the reason I have given the average as well. Let's see how the market is going to give us on Tuesday. It is a kind of a volatile market, it shows. So anyone wants to buy, keep this particular level 10 points as a stop loss and go for a buy. Anyone go for a short, keep 0.39% or 11,800 range, go for a short. If it is breaking and go towards to the next level around support resistance level 1, they can go around 11,847 with the stop loss of 10 points and go for a short. It is all purely depends on how the market is going to open. If the market is opens in the flat positive around 20, maybe 10 or 5 points, they can go with the first level of average, which is 11,800 range. If market is opens little higher gap up around maybe 47 points, like that, if it is opens, or 50 points if it is opens, then we can go in the resistance level 1 around 11,847 with the 10 point stop loss and go for a short. And buying level, which is these two range, you can buy 11,704 and 11,657. Those ranges you can buy with a 10 point stop loss and go for a buy. Let's see how the market is going to give us on Tuesday. Thank you.